Greetings, Main Street. Ryan Mack, president of Main Street. Let's break down what's been going on in the market and how it might affect your wallet as we step into a brand new week. Let's get to it. Last week was a roller coaster for the stock market, all thanks to rising tensions between the U.S. and China. Stock futures took a hit this morning after China pushed back against the accusations from the U.S. regarding trade violations. The market was already on edge after a brief pause in tariff discussions. Remember, we talked about that last week a little bit. And now we're seeing S&P futures down by 0.53% and NASDAQ 100 futures dipping by 0.68%. The Dow also fell 174 points, or about 0.41% at the time of filming this video. In a twist, Trump hinted at possibly doubling the tariffs on steel imports to 50%. This uncertainty keeps the market buzzing and could lead to more fluctuations in the upcoming weeks. Despite the turmoil, May was a surprisingly good month for the markets, with the S&P 500 gaining over 6%, the best performance since last November. But let's not get too comfortable. Analysts like Morgan Stanley's Chris Toomey caution that we might still be in a range-bound market. In other words, don't expect the momentum from last month to carry us straight to the moon. And I kind of tend to agree with that. I don't expect a large pullback, but I don't expect to see a lot of appreciation either. As we look forward, there's a slew of economic reports scheduled that could shed a light on how tariffs are affecting the economy. Here are a couple of key points of data to keep an eye on. Number one, U.S. employment report, Friday, June 6th, expected to show a gain of 125,000 jobs for May. This report is crucial as it provides insight into job growth and labor market health. A strong employment report can boost consumer confidence and spending, while a weak report could signal economic trouble ahead. Let's check out this one coming up on Thursday, June 5th. U.S. trade deficit. Been a lot of discussions about trade deficit lately, anticipating to come in at a staggering negative $90.3 billion for April. The figure represents a gap between what the U.S. imports versus what it exports. A widening trade deficit could indicate economic weakness and may impact currency strength, which in turn affects market stability. So what does all this mean for you? What does this mean for your finances? Here are some tips to make sure you keep your financial game strong. Number one, we got to keep budgeting. Know how much you can allocate for investing. Have a clear budget helps to make sure you can make informed decisions about where to put your money. This also ensures that you can still cover your essential expenses on a month-to-month, week-to-week, day-to-day basis. Number two, emergency fund. If you're in a position to invest, don't forget about your emergency fund. Aim for at least 3 to 6 months of living expenses saved up. This cushion could give you peace of mind, especially during uncertain times like these. Number three, let's diversify your investments. Don't put all your eggs in one basket. Spread your investments across various sectors to mitigate the risk. Consider a mix of stocks, bonds, and potentially some real estate or mutual funds. We give a lot of classes about how to go about doing that, so stay tuned for upcoming courses that we're offer virtually. Number four, stay informed on these tariffs. Keep an eye on the upcoming situation with Trump's tariffs. This could lead to significant market shifts, especially if it heads to the Supreme Court, which I do think it probably will go to. We'll keep you updated as new developments arise. And then number five, remember, think long-term. Investing is a marathon, not a sprint. Focus on long-term growth rather than day-to-day market fluctuations. This mindset can help you stay grounded during times of volatility. As always, stay smart with your investments and don't hesitate to reach out with any questions for further insight. Use our Economic Hotline, 917-809-4231, with any questions or resources in your area. Happy investing. Be the change.